Hey, good evening. I'm looking right now at April-June cattle spread, and as you can see, today we rallied. We opened down here, and we just took off and exploded. And as you can see, Globex at 1 o'clock traded 825, negative 825, and that is the April trading under the June. What is very interesting to note is the pit settled at 95 cents. So that is a 12-cent difference, okay, between prices, which is $60 a contract. And you'd say, well, how could that be? How could the same commodity, live cattle, be at two different prices at the same time? Well, basically, what happens is the online market usually gets ahead of the pit market, and the pit market lags behind the online market. And that makes sense because, as you all know, sending mail versus sending an email, the email is faster, just like the online market is faster. But what happens is the floor traders are able to take advantage of that. They can arbitrage the situation, and they make essentially risk-free money. And that's why they spend, $2,000 a month, is to exploit opportunities that exist like this. And a lot of traders, for the most part, have no idea what goes on in the pit. They're all about electronic markets and thinking that they're the best thing in the world. Personally, I really don't care. I like them both. I still trade the pit markets. I also trade online markets. The pit markets, really, they move more favorably, especially if you know some people down there that are really active in the markets. You can get an idea of what's going on. And not suggesting anything illegal. I'm just saying, if traders that trade, they have a real good grasp of what's going on because they're there. And going back to this pit versus online markets, what's really interesting is if you look at March 1st, okay, March 1st was the last day of the pre-Goldman roll, and this is now known in the cattle markets as Rogers roll. And during Rogers roll, it was the last day, okay, it takes the last 2 days of the month and the first of the month, and the 1st of March was obviously the first of the month, so it was the last of the 3 days. The spread was on the screen at 1 o'clock at 202.5. And the pit settled at 220 at that very same time. Well, since I know the Rogers roll goes on during that time, and most other traders do, I was like, all right, well, I'm going to get out on the pit, close using the settlement prices if I can. So I called in an order and put my order in, and I got filled at 220. And sure enough, it's online at 202. Well, hey, if I bought 100 contracts here, I could sell them right here for 18-cent profit instantaneously. That's pretty ridiculous because that's $70 a contract. 70 times 100, that'd be, what, 70 G's? Free? I wouldn't be complaining about that. Anyways, I didn't do that many. I did like 12. But nonetheless, you can apply anything with large enough numbers and it still works as long as the volume's there. We're going to take a look at the spread, though, and see why we are where we are. As you can tell, all right, we've slowly worked our way lower. We were 675 on 222, and look at each day. Lower, 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 lower. And all of a sudden, today, it's like, boom, what the fuck just happened? Blew up in our face. Well, part of the reason is Rogers roll ended on the 1st. The Goldman roll doesn't start till the 7th. So no one's really excited to put the spread on at these levels. And you can see that from yesterday. It kind of just chopped around and didn't do much of anything. And, there's no real direction established. It was an inside day. We stayed within the other day. And, we're waiting to make our move. Well, that was kind of determined for us because this morning, before we opened, we were already, significantly higher than where we were yesterday. We settled right here at 80, okay? Or negative 180, and by the time we opened, we were like 152.5. So we just kept going. It was like a freight train express. And the thing is, none of the local traders want to take the other side of the spread, and I don't blame them, because what's going to happen is two situations. Okay, one situation is everybody that got short down here started to blow out today. There's some people that are really reluctant. People who know the markets and are smarter than everybody else. They're going to hold on. This is just bullshit. Blah, 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 blah. Well, guess what? Tomorrow, they're going to blow out up here. Right around even. Because they'll be holding on and be like, I don't understand this. This is just ridiculous. So, let them be stubborn. Let them be dumb. It's not our problem. And so the floor traders are saying the same thing. The big spreaders are saying, why get in the spread? The spread's fucked. Are you kidding me? It was just at 220. All right, 202, but 220 in the pit. So right here. And now it's all the way up here in no time. And the Goldman rolls coming next week. Next week, they're going to be jamming the Aprils, buying the Junes. Why get in the way of something that's just getting out of control? So let's let these guys blow out, and we'll put them on up here at these levels. Something, just an extreme price move. Or we can put the spread back down here. Okay? Because what's going to happen is these people who blew out, okay, forced other people to get long this spread and buy April and sell June. And so now they're long up here and they're like, oh shit, this thing's going to even money. They're thinking they have the greatest trade in the world. Well, what happens when it goes up their ass? Well, then they're going to blow out and the spread's going to come back down here. And then Goldman's going to come do their thing and the spread's going to get back down to here. So it doesn't matter. Either way, if it goes all the way up, okay, we'll take advantage of it here. If it goes all the way down, we'll take advantage of it here. And if it sits, we'll just wait. We'll wait till Monday and then make our trade. And now I'm just going to flip over to a 5-minute bar real quickly because a lot of people don't like looking at the market profile. So we'll be doing that. And here is a simple spread 5-minute chart. And I'm shrinking it down a little bit. But we have two things, okay? On the bottom, we have volume by price, or volume, just volume per bar. And this is a 5-minute chart. And then this is volume by price. So you can see where the heavy trade's taking place. And look at this. You have 2,200 right here. It's at 175. I got a feeling when the funds start jamming them again, we'll be getting back there pretty soon. And then here, 1,700 at 6.5. So it's kind of like a mixed bag of where we're going to be. I have a feeling that we'll end up back down this area where I'm scrolling my cursor. But might be some time. We'll wait and then we'll strike accordingly. Anyways, I hope you guys appreciate it, but if you don't, I don't really care, because this is for myself. I love hearing myself talk, because I think I'm the greatest. Anyways, peace, good night, enjoy it.